Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to talk about Microsoft because I've been sitting here, I've been doing some reading, and I'm a little annoyed at how both Microsoft and Alphabet both missed their earnings expectations. I'll talk about what that is in a second. And Microsoft fell, but Alphabet actually went up. Y'all both missed the mark. Y'all should be moving in the same direction, but they're not. And that is the problem with earnings. And like I said, earnings season can be quite weird and wild and all types of things. So I'll pull out some of the things that stood out to me, some of the things that really annoyed me, and how I am going to manage what I'm doing in my investments and why I feel the way I do. Okay, so when you pull up a lot of these headlines, you're going to see that Microsoft missed their expectations. And that is true. When we say expectations, there are a panel of analysts that work at all these investment firms. They tabulate some numbers and they say, look, I think that Microsoft is going to make $40 or $52 billion in this quarter. Okay, and they put this out, and then CNBC and all these other services average that together and say, this is what we expect you to do, $52 billion over the last quarter. And then, earnings season, Microsoft comes out and says, hey, we made 51.6 billion or whatever number, and everybody says, oh my god, you missed your earnings, you're terrible, the company drops. That is essentially what earnings is. Now, during these times, people use this information and make predictions and make assumptions in some case, or make an accurate judgment about what's going on in the broader stock market and the economy, and paint a picture, or at least put the puzzles to a picture together. So let's walk through what that means. One of the biggest headlines that you've seen probably is that Microsoft is slowing down. They had their worst growth since 2020. Think about that. That ain't bad. To me, that is not bad. That was 2 years ago in a pandemic where growth was, different, right? Where everybody was shut down. Some people had to buy laptops to send their kids to school, unfortunately, right? You were sitting at home, and it was a dark time. People were buying Xboxes and all types of things to keep them busy in the midst of the pandemic. And here's the other thing. While the headline that Microsoft misses expectations, that's the thing that people react to, it still grew by 12%. Double digits for a company that's been around since, what, the 70s? Is still pretty solid. That's year to year, you grow by 12%. If your salary grew by 12% every single year, and that was the lowest growth you've seen, I think that'd be a good thing, right? Context is extremely important. If we are expecting a recession, which many are, if we are seeing higher inflation, which is going to cut into that profit number, I would expect a slowdown. But for you to still be up by 12%, maybe I'm optimistic. Maybe because I just own shares. Call it however you want to call it. I don't see this as a panic button. I don't see this as, oh my god, I need to sell out of this. And here's the thing that really drove it home for me. So I'll put this on the screen too. And this is from CNBC. So remember that Microsoft has a cloud computing platform called Azure. And so the revenue from Azure and other cloud services grew by 40%. Okay, it grew by 40%. However, compared to the previous quarter, it was 46 and now it's 40. Okay, I get it. That's slowing down. That is something that would raise an eyebrow, at least for me. Okay, you were at 46, now you're down to 40. Here's the thing. Analysts that were surveyed by CNBC, in this case, expected 43%, 43.1% growth. So you expected a slowdown, right? You knew it was 46, you thought it was going to come down to 43, and it came down to 40. Okay. If your salary grew by 40%, if you own a business, your revenue grew by 40%, my book sales grew by 40%, I would be quite pleased with that, considering what is going on in 2022. I don't think that's that bad of a thing to grow by this amount. Is it lower than the 46? Yes. But estimates already expected for it to be lower than the 46 anyway. You're off by 3%. We could argue back and forth whether or not 3% is a lot. In some cases, yes. In some cases, no. But again, Azure is just one part of their business. What I am most concerned about, though, because it is not all roses here, is this. They are starting to see a slowdown in ad revenue. That is from LinkedIn, from Bing Search, and from their other platforms. The reason why that is a concern is because some people start to use advertising revenue and how much people are spending on marketing as a proxy for where the market and where the economy is going. Because if businesses can take cheap money, they can grow easily, but also they can advertise. If they're showing more money towards advertising and spending more money on advertising, the thought is you're looking to grow your business. You're looking to take in more people. Well, when you start to see a slowdown, like many companies have, we've seen a string of layoffs left and right. We saw Google say they're going to do a 2-week hiring freeze, and you're starting to see things slow down a bit. That signals that, hey, look, it might be something going on. But also, the easiest thing you can do before you start laying off people is to what? You can cut back on marketing. Marketing can be expensive, especially for a company like a Coinbase, for example, where you get the referral code and they give you $5 to sign up for an account. Well, if you got millions of people, that stuff starts to add up. So what they do is to start to cut those things back. They're starting to cut those things back. They are expecting to slow things down. If you slow down on your marketing, the thought is you're going to slow down your revenue. You slow down your revenue, you start to see how things go, right? Slow down revenue, probably go slow down hiring. Slow down hiring, and then that cycle starts to continue, and that is how you can end up in recession. That is the logic here. That's the logic here. But here is the bigger picture. So we've got, we know that Google missed expectations, which I'm assuming is because of a lower ad revenue expectation. They didn't pull in as much money as we expected. I haven't gotten time to get into that, okay? I will have to sit down and do a separate video. It takes time to read all these things. So it's going to take me some time to react to Google's. But that's number one. We see it with Microsoft. Who else is a big advertiser? There's also announcing earnings this week. It's too many of them. Well, Meta is primarily a digital marketing advertiser. That is what they do. We'll see what that is. And people are going to start connecting the dots. Google lost money. Snapchat lost money. We know why Snapchat lost money. Microsoft is losing money. And by losing money, I don't mean like negative. I mean slow in growth. Then things are going to start adding up. Amazon also has an advertising platform within their main online business. We will see if those things start to get connected by investors and analysts, and we'll see what people project that to mean about the stock market and about the economy. Again, I don't know. We will see, but that is something that says, look, it's easier for me to cut back. Again, easier for me to cut back on marketing spend than it is to lay off somebody. I would rather say, look, don't spend $50,000 in advertising. Don't spend $100,000 on Facebook ads and Google ads and all that kind of stuff. Cut it back down to 25 and you can keep your job, right? I'd rather keep you and reduce the marketing spend for as long as I can and then ramp things back up later on down the line. That is the thought process. Should everything start to slow down? So we'll see. We'll see if this is going to be a trend, if those things are connecting. We're going to find out officially whether or not we're going to be in recession by like Thursday or so anyway. So keep your eye on all of this stuff. The other thing too is, again, this is not discouraging to me. I mean, in a year, context is always important. In a year where the market is down the way it is, in the year that inflation is up the way it is, that's going to cut into costs. I think Microsoft, and I don't have it here, Microsoft lost more than $500 million due to inflationary costs and Russia and exchange rates. So we've got between $500 to $600 million you could have added to Microsoft had it not been for some of these just externalities, these random things that kind of happen to hurt the company. This is not discouraging to me. Okay, I don't love it. I don't love it. But as an investor, if the price is right by Friday, I will be buying more. This is not something where I'm raising a red flag and saying, hey, look, this is a problem. I can say that for Netflix. I can say that for Snapchat. Come tomorrow or Thursday, I might have to say it for Meta too. But at this point, I'm not seeing it, right? So when I look at, and I'm thinking of Netflix, when they saw the first, and I know Netflix reported earnings like last week, but when we first saw that Netflix lost subscribers for the first time in 10 years, or whatever that number was, that's concerning, okay? Not slowed down, but lost subscribers. I think on the last earnings call, and quote me if I'm wrong here, I think it was like 1.9 or something. They expected 2 million lost subscribers. Now you go from like slowing down to actually losing, and you're in the negative, and that is a win for them, which is wild to say. I think it's 1.7 or 1.9. Again, correct me in the comments. However many subscribers they lost, right? That is a problem. Slow growth and negative growth are two different things. Same thing with Meta. Way back earlier this year, it was the first time that they saw a loss in active daily subscribers. That is a problem. That is a bigger thing. That is a red flag. This is like a yellow one. Things are slowing down. We'll see, right? We'll wait things out. We'll see what's going to go on with the economy, and we'll make a better judgment. So for me, and I already own Microsoft, this is something I can continue to dollar cost average. Something like Meta, Netflix, Snapchat, that is something that would concern me a bit more. All right, so last thing I'll mention, tomorrow I think we get an update from the Federal Reserve. Tomorrow is Wednesday, so we're here for Jay Powell. I assume that they're going to raise interest rates by 0.75%, that's 75 basis points. And then Thursday we'll hear from I guess the Bureau of Economic Research. I think that's the official body that declares whether or not we are in a recession and how GDP, gross domestic product, has changed. Now, other thing, I'm recording this at like 6:04 p.m. I just got an alert that says futures tick up ahead of key Fed decisions. So yeah, we're gonna hear from the Fed tomorrow. We'll see. We'll see what the market does. And you also have even more companies announcing their earnings. So again, very newsy week, very busy week. Stay calm. Regardless of what happens, stay calm, have a plan, and execute that plan. If you need help creating a plan and figuring out what works for you, make sure you check out the members only group, because we do exclusive videos once per week to help you to better understand the market, give you a deeper understanding in a way that makes sense. And we go into all the nitty-gritty details, websites, tools, and everything you need to know to become a better investor. All right, that's it for me. Talk to you later.